blockchain or otherwise. And so I think it's only a matter of time until you can perform those other functions, lend, borrow, provide liquidity to facilitate trading, these types of things, which also enhance your returns.
Yeah.
Right. So by making it composable, now you can actually boost your return on top in a fundamental way.
Yeah.
And so I don't think, smart money is going to leave that on the table once they understand the mechanics.
Yeah. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're actually going to do a two-part video breakdown. So a part one, part two. I'm going to chop this up in half because this video is going to be a little bit extensive. I'm going to show you guys how I am going to utilize the DeFi ecosystem to keep and maintain, along with expanding and growing my crypto wealth after this next bull market cycle, and how you all can as well, by first educating yourselves properly, taking a mature and well-rounded approach to understanding how you can get your digital assets working for you, and you don't have to sell back into fiat via the traditional financial system. And instead, you can utilize these DeFi platforms that are being built out now. Maybe you're not going to utilize them now, but when they mature and they continue to develop and expand and grow, you can use them in the future after this next bull market cycle to keep and maintain and grow your crypto wealth. And I'm going to show you all of that through a detailed lens in today's video breakdown. But before we do that, I ask that you guys do me a favor. You smash the thumbs up button and you subscribe. And before we get to that portion of the video, I want to share a couple of video clips with you all, setting the tone. All right. So I have some notes here. Again, this is going to be a two-part video breakdown. So in the first part of this video, before I show you guys the platform that I'm going to be deploying some of my assets on to maintain my crypto wealth and expand my crypto wealth, I want to prove to you guys that banks are, for a fact, interested in earning yield, and that perspectives from these large market participants, from these large organizations, are telling you guys on stage that what's going to bring a lot of demand back into the digital asset ecosystem through DeFi is going to be the search for high yield, especially considering that we are about to head into, or presumably about to head into, a low interest rate environment. The search for yield is going to be very appetizing. And that there are being platforms built out right now where you're going to be able to earn anywhere between 5 to 20, possibly even 30% APY to APR on your digital assets in the next market cycle and in the now, if again you want to take that risk. But my primary goal here is to get you guys educated, to show you all why we created the Wealth 28 Club that has over 100 video breakdowns. And still, every single week, we're uploading new content, hosting Zoom calls for our private members, showing you guys a detailed perspective as to how we are growing and expanding our wealth in this digital asset ecosystem. So if any of this information that we go over today seems appetizing to you and you want to learn more about DeFi and how to get your digital assets working for you, even if you don't want to deploy now, you just want the education, so that way when it's time and when you're comfortable to deploy into the DeFi ecosystem to get your assets working for you, generating you passive income, head over to CYPRXtrading.com and join the Wealth 28 Club. We would love to have you on the team, and it's going to do nothing but benefit and educate you on the process in which we're going to talk about today. So let's set the tone. I want to start off with a video clip from an individual representative here. I'm not going to go into detail with the credentials of all these people. Again, if you guys want to just pause the video, you can look at the videos and then you can go check them yourselves on YouTube. All of the people that are going to be speaking to you today have valid credentials, either in the traditional financial system or in this new digital realm of things. All right. And so we're going to start here with this gentleman speaking on stage. And these two video clips that I'm going to play with you back to back confirm that financial institutions want yield. And then the other gentleman goes on to mention that these large organizations, these financial institutions, are not going to leave the opportunity of DeFi and earning yield on the table. They're going to take advantage of it. So let's take a second and let's listen to what these two gentlemen have to say. And then we're going to roll into another couple of video clips. I have about 6 video clips to share with you guys before we jump into the educational portion of this video breakdown. That's going to be part 2, where I show you guys a platform that I'm going to be deploying some of my digital assets on to maintain and grow my crypto wealth after this next bull market cycle. All right, so make sure that you stick around for the entirety of this video, and let's roll this first video clip.
To be being institutional adoption of crypto, I think you could argue either way. Obviously, most of the primitives seem to be being built predominantly on Ethereum. Ryan, I know that most of the work that you've done in the past has been on Ethereum. You're maybe moving into Bitcoin. How do you see all of that developing?
Yeah. So, it's interesting that we're seeing that the ETH ETF is not getting quite the traction that we expected. And people would at a first glance say, well, that just means it's not as attractive to institutions. That's not really the case. Institutions are smart money. They'll go to where the yield and the returns are. And institutions are deciding to go on chain and pursue that staking rate or more compelling yielding rates that are natively available in Ethereum and other ecosystems. Whereas the opportunity,
Right. So he just confirmed that financial institutions are compelled and are chasing high yields. I want you guys to keep that terminology in mind as we move forward, is the yield terminology, right? Earning passive income, earning on your digital assets, having your money constantly working for you, compounding, expanding your wealth every single second of every single day. And again, towards the second portion of this video breakdown, I'm going to show you guys a platform, again, not financial advice, that I will be utilizing in the next bull market cycle. I could use it now, and I'm going to break that down for you guys to expand my wealth and not have to sell. You know how many people you guys see these predictions on YouTube? I know you guys see them. You see, oh, if you have 10,000 XRP, you're good when it hits $20 and you can sell it and you're going to become a millionaire, right? Whatever. Why would you want to sell your XRP for fiat currency that is devaluating at a rapid pace year after year after year? When you can take your assets, you can take your XRP in the future, you can deploy them via the AMM feature in the DeFi ecosystem, and you can earn yield, passive income on your XRP instead of having to sell for fiat currency. Again, to each his own. We're going to get into that portion of today's video breakdown where I'm going to show you what my strategy is going to be moving forward, where I'm planning on selling a portion of my digital assets, and I'll get into that. But I'm planning on keeping about 80% of my portfolio for 2030 and beyond, 2040 and beyond, right? Showing you guys that you don't have to sell for fiat, man. Like most of these people are going to do, and they're going to get wrecked because they're not educating themselves now in DeFi on how to expand and grow your wealth. So let's listen to this other gentleman here mention that these financial institutions are not going to leave the option to earn yield on the table. They're going to take advantage of this, which the reason why I'm playing these video clips is to show you guys, if these financial institutions are taking advantage of these options, what do you think you should be doing? Again, not financial advice. Let's listen to what he says here.
When market's liquid, I mean, John, how do you think about this?
I mean, I think the real promise of blockchain, the most exciting part, is taking things that aren't liquid today and bringing liquidity to them, namely private assets, things like venture capital assets, private equity assets, real estate. The other stuff, already exists broadly in a liquid form, whether that's, a treasury ETF or a public equity. And so putting it on chain expands its distribution, but it really doesn't offer a new product to the market, or a return, of an asset class that they can't currently access. I think like the big unlock is when you take an asset class that's exciting, like private equity, that has a higher return profile than people can access today. You put it within this infrastructure that's global, accessible, and my view is that DeFi will make it more liquid than centralized exchange trading. And I think now you have a radical improvement, in accessibility to these types of instruments that will benefit both funds, so they can recycle capital, return it to their investors and redeploy in the primary markets, and investors who now have, access to a higher return asset class. And particularly for smaller investors or even high net worth individuals, family offices, liquidity in those assets is really critical.
Yeah.
And today, when you buy those things, you're stuck for 10 years.
Totally. Yeah.
And it's really just, it's not that favorable. And so it does provide a fundamental improvement in market structure for those types of products once people are ready.
Yeah. I mean, like I would love to be able to take some LP stakes in a variety of funds that I have and use that as collateral to take out a variety of loans. Right now, you can't really do that. I mean, that to me has always been one of the North Stars for this.
And I think you look at a market that's north of 10 trillion of assets. It's all paper.
Yeah.
There's really no digitization, blockchain or otherwise. And so I think it's only a matter of time until you can perform those other functions, lend, borrow, provide liquidity to facilitate trading, these types of things, which also enhance your returns.
Yeah.
Right. So by making it composable, now you can actually boost your return on top in a fundamental way.
Yeah.
And so I don't think, smart money is going to leave that on the table once they understand the mechanics.
Yeah.
Right. So he just said he does not believe that smart money is going to leave that on the table once they understand the mechanics. That he said lending, borrowing, staking, providing liquidity. These are all things that we talk about in the Wealth 28 Club, educating people on the options that you have available now to expand and grow your wealth and get your digital assets working for you. So that clip was monumental. Now we're going to get into this. This is the co-founder of Chainlink, and he's talking on stage in this little tiny panel about how yield created this massive boom and demand in DeFi, and how that's going to continue once we head into this low interest rate environment. So I'm going to play 2 video clips from Sergey. Just listen to what he has to say, and this is going to coexist with something that the blockchain leader at EY said from his perspective. What's going to create a massive demand for DeFi and for crypto in the next couple of years. Take a second and let's listen to what this gentleman here has to say.
Basically, they drove the growth proven out. I think there is another kind of very big dynamic that drove the growth of DeFi to 200 billion, which is double what it is today, which is basically the yield, right? So you were in a low yield environment and the DeFi yields were very high. And I feel that was the big driving force that kind of went away. And now there's this consistent search for yield that makes DeFi competitive with the TradFi community yield and with other sources of yield in the blockchain ecosystem, right? CFI yield, whatever other yield. I think that balance is finally shifting back towards DeFi, especially if the Fed interest rate continues to go down. So the more the Fed interest rate goes down and the more the DeFi yields continue to remain high at a low to moderate level of risk, then kind of the party for DeFi could be back on.
So you heard him say the party for DeFi could be back on, right? Listen to what Paul Brody said just a couple of months ago. He literally said the same exact thing. And this is coming from a major consulting firm, ladies and gentlemen. This is EY, the blockchain leader at EY, telling you guys this. All right. So we heard the gentleman at the beginning confirm that financial institutions are not going to leave high yield options, staking, lending, borrowing, providing liquidity on the table in order to maximize their returns. He literally said that word for word. We got Sergey, co-founder of Chainlink, mentioning the same thing. And we got the gentleman from EY saying the same exact thing. Take a second and listen here.
But I think, as interest rates do eventually come back down, the search for yield is going to go back into overdrive. And then I think that's going to bring back DeFi with a vengeance.
Right. So he said the search for yield as we head into a low interest rate environment is going to come back, going to bring back DeFi with a vengeance. Okay. That's not coming from me. This is, I'm just showing you guys why you should want to get involved in DeFi now, because that environment has not completely shifted yet. We have not experienced what these two gentlemen are talking about. Institutions are not here yet. We're only sitting at a $2.2 trillion market cap. You do not want to get involved in DeFi. You do not want to learn how to earn on your digital assets after the financial institutions come in. You want to learn all this stuff before. Even if, again, like I said, you guys don't deploy. You don't have to deploy. Here in the Wealth 28 Club, we don't encourage you guys to deploy into DeFi unless you're comfortable doing so. But what we do encourage and what we do promote is education. Getting educated on how to take your digital assets and start earning on them in the now, so that way when the time is right and when you're comfortable, whether it's regulations or whether it's your risk appetite, whatever, you can. And you can keep and maintain and expand your wealth. That should be everybody's focus. I don't understand why people would not want to do that. But again, teach his own. I can't, you can, what's the saying? You can lead a horse to water. You can't make them drink it, right? Moving on, something else that Paul Brody said on stage coexist with a platform that's being built out right now, where Paul Brody on this platform right here, this is again the EY global blockchain leader, and he's talking with Daniel. I'm not going to butcher his last name. He's the senior vice president and regional manager director at Coinbase EMEA. All right. And listen to what they talk about here about how right now there's no platform, collectively speaking, where you can go and you can earn 30% on your stable coins. They talk about that being a possibility. And then the Coinbase representative mentions that financial institutions and large organizations like Coinbase have tested this out. Okay. And then I'm going to play one last video clip before we transition into the second portion of today's video breakdown to show you guys that this is all happening. Okay. And you're going to be able to take advantage of this, but not unless you educate yourselves, which is what, again, we are attempting to do here at CYPRX. So let's listen to what Paul Brody here has to say.
A major exchange or a big fintech firm would offer what I would call curated access to DeFi. So one of the things that I find as a user is kind of bewildering is there's a million things out there in the world of DeFi. And some of them kind of blow my mind. One of my friends was like, Paul, I can't believe I'm getting 30% return on my cash. I'm like, risk reward, that must be risky, right? But still, I want to know about it. I just want to know about it, right? And one of the things that surprised me is that no one has offered what I would call this like a curated window to say, listen, we've done the work of sorting through these bazillion DeFi options, and we have 3 deposit and 3 lending or 3 kind of collateralized lending options that we could recommend to you, right? And I'm just curious, like, is that something you've ever thought about? Are there regulatory reasons why no one has done it? Or should I immediately quit my job and go start a service that does this?
I think you can maybe join forces with a startup in Germany that were called Unlimited, and they tried that, but then they pivoted. So I don't know why it didn't work, but I don't have insights on why it didn't work. No, I think you see this in various forms. Like I think various of the larger players are sort of experimenting with these things. I think Coinbase Wallet included.
You just heard it from the horse's mouth himself. He literally just said large organizations, institutions are experimenting with these things.
No, I think you see this in various forms. Like, I think various of the larger players are sort of experimenting with these things. I think Coinbase Wallet included.
Okay. You cannot get any more clear than that. And what did Paul Brody mention? Earning 30% on your cash. Now, let me blow your mind. Here's a platform that is being created right now. All right. This is, give me just 1 second. This is Sega, if I'm not, hopefully I'm pronouncing that correctly. And just listen to what this lady talks about. They're building out right now. Okay. And again, remember the first portion of this video breakdown, my intent was to show you guys that these large organizations' perspectives from these people that work in these organizations are telling you all that they're going to want yield. They're not going to leave it on the table, especially when the interest rate environment changes. The search for higher yield is going to be very appealing. We heard that from Sergey. You heard that from the EY representative. Then you heard the gentleman at EY talk to the Coinbase representative mentioning earning 30% on your cash. Listen to what this lady says. They're building out. Okay. Again, isn't this something that you would want to get educated on so that way you don't have to sell back into fiat and put your money back into a bank account that earns nothing, that earns absolutely nothing, chump change, right? Devaluating your currency at a rapid pace year after year. Why would you want to sell back into fiat? Instead, you could try, we'll get into that. Okay. Just listen to what she says here.
Fund stake the Sega Vault tokens to make an additional yield. So super excited about this launch. And then another feature that we have launched last month is called DCS rotation. For those of you familiar with DCS, it stands for dual currency swaps. You can stake your USDC, make a baseline yield, and wait until the market drops 25% to buy Ethereum. Now, when that converts, in the past, you had to withdraw the Ethereum from the platform, but now you can actually set it so that it restakes into an Ethereum strategy that converts into USDC if Ethereum goes up. So what that means is you can set a strategy to continuously buy low and sell high with your USDC and Ethereum. But what's really cool is that you make a baseline yield of 5 to 6%. And depending on where you set your strikes, it could also go up to 20 or 30%. So
boom. Can you imagine, right? If you have, let's just say the next bull market cycle, you guys heard it from the horse's mouth. She said 20 to 30%, depending on how you set your ranges, I'm assuming in this platform, right? Imagine having $500,000 extra liquid capital after this next bull market cycle, or even $100,000 extra liquid capital, right? After this next bull market cycle that you're earning 20 to 30% on people. That is an average minimum wage salary that you're making in a year on stable coins. And you mean to tell me that people still want to sell out into fiat or what? So wow. Okay. Smash that thumbs up button and subscribe if you're enjoying this information so far. We're always putting out the realest info. This is the type of stuff that we talk about in the Wealth 28 Club, getting people's brains acclimated to what is really happening via these institutional perspectives. You think that institutions are sitting there talking about, oh, I'm going to sell after this next bull market cycle and be rich in a million. No, they're figuring out how their digital assets are going to be working behind the scenes for them, constantly generating them revenue. And so can you as a retail investor, which I've shown you guys in previous videos. If you haven't watched them, go back and watch them, how large participants from the DTCC, okay, representatives from the DTCC have told you that we as retail investors have the upper hand on institutions. So hopefully you guys enjoyed this portion of the first half of this video. All right. Waking you guys up, getting you guys to realize the perspectives from these large organizations. Smash that thumbs up button and subscribe. Now let's transition. Now that's all out of the way.